Hey everybody, it's Pete. Good morning. How you doing? Welcome to a new episode of Stocks for Breakfast. Very happy to have you with me today. Short week of trading this week. So in today's video, we're going to get right into it. We're going to talk about momentum stocks today. We're going to talk about the difference between longer term plays and just the stocks that are active right now. Obviously, we're going to talk about, is Nvax stock, Novavax stock a buy right now with the recent volatility as things in the world appear to be heading in the wrong direction with a lot of things right now. We're seeing increased volatility. I actually saw in the comments here a couple of people talking about short selling. We actually had quite a few conversations last week, not only about short selling, but even just getting to the point where you're hedging long positions against some short sales. We're going to talk a little bit about the difference between these two guys, Wall Street Journal and Investors Business Daily, and understanding what momentum trading is and how momentum trading plays into if you should be buying Nvax stock today, as well as other healthcare stocks, because they've been pretty much on fire as well. We had Neo Day. We have earnings coming out this afternoon, scheduled to come out this afternoon. Got to be very careful about how we say that. So stick around. Be right back. We have a lot to cover in today's video. Okay, so good morning, everybody. Just want to make sure I say hello to everybody. John Bates, good morning. Bill Thomas, always a pleasure to see you. Bill, how's it going? I hope everything is well. David LeBate, good morning. Seeing a lot of boot campers and ex-boot campers in here today. Excellent to see. I love that. Let's see. Hey, Andy, how's it going? Ross, good morning, Ross. How are you, pal? And let's see, Frank, good morning. All right, so obviously we started talking about these guys here today, right? Whether you read them every day, whether you read them on the weekends, I actually read the print version on the weekends simply because everything is digital during the week. You kind of glued to the screen where everything is over here. So choosing to buy stocks during the week is mostly driven by the price activity during the week. This is getting a little bit more of a update on what's going on. This is actually, I think these are actually from last weekend. I had these up here in my office. But the interesting thing is this part over here, if you could see it, where IBD presents the current market conditions. And that's a little bit wider picture than what we're looking at here. We're kind of trying to catch some cash flow and a little bit more nimble than the longer term picture. The longer term picture has clearly changed, especially if we're talking about Bitcoin. Bitcoin is actually well below the 50-period moving average. Tesla broke below the 50-period moving average last week. XPEV, we're going to talk about NEO in a second, all below the 50-period moving average. We're going to work our way over, though, into Nvax, and I'm actually going to talk about, we got a lot of stuff, got a lot of props today. We're going to talk about these two books today as well. I'm going to first go over to Nvax stock. By the way, if you are a trader like myself who follows the S&P futures, the S&P 500 futures, make sure you move it over into the new contract. That's one of the biggest things. Make sure that you've shifted now over to the March contract. It can be kind of sneaky sometimes when you're not paying attention. You're still looking at the old contract. You're like, my gosh, it's not moving today. Well, it's not moving because nobody's trading it anymore. So let's make sure that we update that. So we're actually going to go over to Nvax. And we're going to talk about the difference between trading the order flow versus just trading the most recent tape. We actually had some good comments last night. Last night we had our swing trade, weekly swing trade review session. And we discussed in a lot of detail. Actually, you know what? Let me come over here. We discussed in a lot of detail what Nvax has done recently, and quite honestly, what a lot of the other healthcare stocks have done, and whether or not they're buying opportunities right now. Good morning, Andrew. How's it going? Merry Christmas to you as well. Thank you so much. Hope everybody's having a nice holiday. Lewis, good morning. Good morning. And Raphael, good morning, Raphael. Nice to see you here. So here's the deal. Like if we break this down and get it down into brass tacks, and obviously what we do, a lot of what we do is we're looking for obvious order flow. We're looking for follow through. We're looking for order flow from one day to the next, from 1 week to the next. Nvax pretty much is volatile in 2021, obviously based on the headlines going back and forth pretty much every other month, depending on it's great, it's not good anymore. It's great, it's not good anymore. Right now, they've gotten approval last week, actually, from the World Health Organization. I got a bunch of people asking me who is who. Who is the World Health Organization? And they're getting approval. They're expanding it to the UK right now. And that's translating into the stock right now being up $20. It's actually up a little bit more than that this morning, which is taking the price action all the way up here. But the point that we want to get across here, whether it's Nvax stock or any other stock, we're classifying them right now as momentum trades, which means immediate volatility and volume that is just based on the most recent catalyst. Now, whether it's an earnings report, in this case, it happens to be the expansion of how everybody's using their vaccine. That means that you are trading on that most immediate time frame. Now, for some people, that could be a 1-minute chart if you happen to be day trading stocks. For other people, it could be you're looking to get in today, get out tomorrow, which is a whole other trading strategy where you are just buying, and as soon as it slows down, you're getting out. Now, the overnight position in these stocks carries a lot more inherent risk right now because you are 100% trading on headlines. If the headline changes tomorrow, the stock could come down 20%. Not saying it's going to. Please don't take me out of context. I'm giving you the things to consider when we're talking about momentum. Now, I just want to bring it up because it's going to play into what we're talking about here in Nvax and choosing the strategy and how you're going to implement that strategy into how you're going to be trading it. I am not personally carrying these overnight. When something comes out and the headline is this dramatic, I am looking for the next move, but it's mostly on the day trading side of things. If I'm going to be carrying anything overnight right now, it's probably on these earnings plays. If earnings comes out good and they hold the bid, similar to what we had in MRVL. We're actually going to talk about some semiconductor stocks today as well. But I want to point out, I'm going to give you a couple of book recommendations, and this is actually one of my oldest books. When I first started day trading, this is actually the name of it. I don't know if you could see it. Let me hold it over there. The Electronic Day Trader, and the author. This is the author here. If you want to take that right there, that's probably the best you could see it. So this is actually one of my first day trading books. And the reason I'm bringing this one up is because it does probably one of the best here. You can actually see this part of the right here, buying dips on limit orders and momentum. That's actually what we're looking at in the market right now as far as some of these healthcare stocks. The other, and we're going to get into that in a second. The other book that I would recommend is this book, Trading on Momentum. And you can see the author's name is Wolf. It's actually Ken Wolf. Now, you might be saying, well, I'm trying to teach you. Why am I giving you these books? It's because I want to give you the full context, the full foundation of what momentum trading is. When we originally started trading momentum way back in the day, things were in fractions. So I'm talking about right around 2000 to 2000. Well, actually became decimals in early 2001. But essentially the way we were looking for trading momentum was you would actually be watching time and sales. For those of you that don't know what time and sales is actually where the trades are happening. So if I buy, you buy, I sell, you sell, depending on where that traded, typically if it's a higher print. So again, we're reading the tape. If it's a higher print, those prints are in green. So a lot of active green prints means active buying and urgency. You start to see those stocks go higher. And then when you started to see time and sales trade what it looked like a Christmas tree, it would be red, green, red, green, red, green. That usually meant that the momentum to the upside was now slowing down. There was indecision. You would sell into that indecision, and then you start to see it pull back. You start to see red prints, which are actively trading to the downside. And when those red prints started to go red, green, red, green, red, green, that's usually where we'd look to bid for stock. And then we look to trade that next momentum move to the upside. So it was very short term. So how does that have to do with Nvax? So if you're a regular viewer of the channel, we've taught this quite a bit in the past, but I'm going to teach it to you again because it matters with these faster moving news plays right now. The way that we look at, and by the way, if you haven't done so, if you could please do me a favor, smash that like button and hit the subscribe button so you get updates. We have new training coming out this week. The way that you see that same thing on the charts that we just discussed on time and sales is only two candlesticks that you need to know. One of them is an energy candlestick, which we would clarify as all green prints or all red prints if we were back then reading the tape on time and sales. The momentum slowing down would be known as what we call an indecision candlestick. You might know it as a doji candlestick. Indecision essentially is a melted candle where it traded high, it traded low, opened and closed, and basically at the same spot. So an indecision, where we see red and green, red and green, red and green, which is indecision on level 2, and indecision on the charts, means a candlestick with a small body. So if we translate that over to the charts, what we're looking at right now is energy candlestick, energy candlestick, energy candlestick. So this is an opportunity where you are trading the most recent price action. And what we're looking for up here is something like this to tell us that the momentum has slowed down. So I think if you want, this is actually probably, you know, I kind of do this a lot, especially on the coaching program, coaching calls, where I'll say, take a snapshot of that, because that's one that you want to get used to looking at. So take a snapshot of this most recent price action in Nvax, because that's really what we're looking at. So now I want to be clear. That's the bigger picture of what we're looking at. So let's actually take a snapshot of that first. This is the bigger picture. You're looking for melted candles, and you can see that right there, right? Small bodies, and you have energy, energy, energy. If we see a melted candle, that means indecisions coming in, and that's where we'll be moving up our trailing stop loss, if not looking to exit that position. Now, that's the bigger picture of if we're looking to trade momentum and looking to hang on to those positions. If you are only trading in the most immediate window and you're not looking to carry these overnight, then you start to drop down on shorter time frames. And what I'd specifically be looking at is the hourly charts on some of these ideas. So we're talking about Nvax, Eli Lilly, Pfizer. Let me actually, you know what? I want to actually give you the list because these momentum stocks are the ones that we've been looking to buy. We actually closed out a swing trade in ABT last week. Just to give you an example of putting my money where my mouth is. We actually got long here on this indecision. We had some energy candlesticks. This one pulled back with the rest of the market. But then we had this energy candlestick on Friday. We took the trailing profit on the way down. So this was roughly, I don't know, like a $6 or $7 profit when all is said and done, somewhere in that window. The other ones that we're looking at in the healthcare, and again, we talked about this in this morning's video as well. This is really what we're looking at. You know, everything that we do, we start out with watching the big picture. We start out watching the market. Then we go into the sectors. And then from the sectors, we dive a little bit deeper into the industry groups within those sectors. So XLV is where we're starting. Nvax, as of right now, we're still well bid and green and up much higher this morning. So we'll get into the actual trade in a second. CERN, we know, had news last week with Oracle. So CERN and Oracle in discussions to do a deal. So that's why one's trading in one direction, one's trading in the other. mRNA, also momentum stock. Okay, actually bullish engulfing candlestick here. Pfizer, BNTX. Okay, not much energy here right now, not much to the upside. I just want to give you a list so everybody can take a look and see which ones match your personal criteria. So this is actually interesting here as well. You can see energy, 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 melted candle, melted candle. So if you're carrying this overnight after it broke this move to the downside, if you are a short-term momentum trader, this is the type of opportunity where if you are a buyer, let me zoom this out a little bit. Let's say you're buying this bullish engulfing candle and you know going into it, and I have to say this because I get like people on YouTube that only watch like 5 seconds. I'm not saying to pick a bottom. We are specifically talking about it in the context of momentum. Momentum is you're looking for those individual candles to start moving, and you have well bid, and you have well bid, and you have well bid. Then you start to see indecision, and that's when you move up and you look to get out of the trade before it reverses to the downside. So that's actually what we're looking at here in INSEE. We're not looking at this much longer term trade. We're looking at the most recent momentum. So bullish engulfing candle, and we're looking at Nvax rallying over the last 3 to 5 days. We'd be doing the same exact thing. We would actually be in here looking for first, where and when would the trend actually be breaking to the downside. And right now it's actually way, way, way up here. It's all the way, not even on the chart, actually. It's all the way up here in 240. So this is a big question we get. And it's actually a very good question. I'm in the money. I have a profitable trade. The thing spiked in my favor much faster than I ever thought it was going to. And it usually doesn't move this fast. How do I exit this trade? How do I protect the profits on this trade? It's too far down using what we call the profit maximizer. How do I hang on to some of this trade? Because I don't want to give back 50 or 60% of that trade. This is where you have to shift over and decide, are you trading momentum? Are you trading a shorter term move because you want to book that profit? This is by far one of the biggest mental problems, probably one of the biggest mental roadblocks that traders need to get over is, are you willing to exchange a smaller gain in exchange for a much bigger gain? So in other words, are you willing to give back some paper profits in exchange for much bigger profits, unrealized gain in exchange for a much bigger move? Now, the interesting thing about that question, because obviously we're experiencing that in Nvax this morning, is you need to know that prior to the trade, which is why I'm leading today with the fact that I am personally telling you my game plan for this is momentum trading. I'm looking for energy. I'm looking for indecision. I'm getting out. I'm looking for energy. I'm looking for indecision, and I'm getting out. I know that prior to the trade, so I already know what I'm looking to see on the charts this morning. So if Nvax is opening up the way it is this morning and you happen to be long already, similar to what we saw in the ABT trade last week. Let me actually pull that up on the chart for you to show you exactly the decision we made last week, which was this. As it started to rally, coming out of here, we saw indecision. We're like, okay, I'm going to be aware of it right now. Something changed, so I need to be watching. Let me actually make that a little bit bigger for you. That's probably a little bit easier. We had the bullish gap. Bullish gap was awesome, but because we know this group is only momentum for us right now, I called out to the community. I said, all right, this is awesome, but it's already gone about $7 in our favor. The entry was 132, I believe it was. I'll actually show you what the alert was. I want to pull it up for you just to give you the full context of the idea. Was over here. So I saw that somebody in here, I forgot who it was asking about our swing trades. This is actually where we had the entry, which was on the 6th. You can see how the whole trade was outlined. You can see we actually hit our initial profit target. And then yesterday we started to pull it up 138 was the initial target. And then we started to see indecision. And at that point is when we moved up our trailing stop based on the fact that it was a short-term momentum trade in a hot sector. So really the comment, the lesson, the game plan heading into the day, whether it's today or whether it's a longer term, whether it's Nvax happens to be the poster child for it right now, as the stock trades higher and catapults higher after 4 days. On last night's coaching call, we said it's already gone what it normally does, maybe has another $15 in it based on the most recent move, which I think was about $70, $75. And going into yesterday was roughly around 60. So we said it still had more room, but what did you need to risk in order to look for that next move? So I said, personally, I'm just looking to trade it as a short-term position today. So as of this morning, it's actually already now gone through what it normally does. So there's two factors in play right now. Trading Nvax or any of these fast type moves, doesn't matter. It just happens to be this. It could be one of the earnings plays that we're going to talk about in a second, which is Nike and Micron. You need to know what the catalyst is for you trading that. Is it longer term trend with no news? Is order flow and you're just looking to trade the next 3 to 10 days? Or are you just looking to capitalize on it? I'll give you a perfect example. This is actually from last week, and I'll give Fred Grove in our community, one of the best day traders that we have in our community. He was actually on vacation in Mexico last week, and he was calling out trades in AMC. So if we take a look at AMC, which is actually down a little bit this morning, we're talking about this trade idea here specifically. This is a very short-term trade. The longer time frame order flow is obviously tilted to the downside where it actually broke here, right? So Fred was walking everybody in the community through the short-term buying pressure here and the levels that it needed to break in order for the trade to be valid as an active day trade. So these are the kind of things that the community discusses all day. First, is it a good idea? And number two is it a good idea in what type of strategy? So Fred called this out. A lot of members of the community hopped on the trade with him. But then the most exciting part after that for me is the community was very aware that the bigger picture of AMC was actually a breakdown of massive support. Now, we did talk about the possibility of short covering rally, and that's actually what we ended up getting. But that's not really the key. The key, and I want to translate this for you mentally into Nvax today, is we knew going into the trade it was going to be a short-term trade just looking for this most immediate push. And when that push looked like it was slowing down, then we'd move up our trailing stop. So if we happen to be watching this, and this is actually the way we do, we have conversations where, okay, it slowed down. That would be, let me actually make that a little bigger. Slowed down, that would be the level. Pulled back and slowed down, that would be the level. Now you got indecision here. You might have actually gotten out when this one actually penetrated to the downside. So that's actually what you're going to be looking to do in Nvax today. At some point during the day today, You need to know, are you trading it based on today's opening price? Are you trading it based on each hour as it unfolds? And that's going to be your line in the sand. Are you trading it on the hourly chart and you're going to use energy candlesticks or indecision to look to get in or out of the trade today? The point that I want to get across today is if you were on my trading floor in New York City, we would be having this discussion in a lot of detail prior to the market opening. And whichever style you chose to be trading Nvax today or any of these other healthcare stocks, that would be your game plan for the day, because you are mentally ready to go with the market and you scripted out exactly what you were looking for. So again, you can see I have my whole day scripted out already. You'll actually go in there and know, if this happens, then I'm doing this. If this happens, then I'm doing this. No second guessing. That's where you elevate your trading to a different level. There's no fear of missing out. There's no, oh my gosh, I should have got more. If you script it out, it unfolds and you know exactly what you're doing. Go with the market with confidence. Go with the market with conviction, because you know what you're going to do before you need to do it. So you got a couple of questions in here recently. Sorry, I don't remember who it was, but asking about signing up for the swing trade community. I just showed you what we do in the swing trade community. We talk about this all the day. Last night, we had a weekly Sunday night swing trade review session and game plan for this week. If you want to get started, it's not a big investment. It's only $129 for the next 30 days, and you get a course. I'm not selling it. It's just that person keeps asking me about it. If you want to make the investment in yourself, that's actually everything that's included. And I'm getting questions about my what my portfolio is for the year. I give it to everybody who's in the community. I don't give it for free on YouTube. If you want to see my portfolio, you have to get into the community. People paid to be there. If you don't want to invest, I'm 100% okay with that. Only you can decide if you want to get on the other side. I'm not a portfolio manager. If you want to see my actual trades, you have to be a member of the community. So other ideas we're going to talk about today also, obviously, NEO and NEO Day. Look, we've spoken about NEO quite a bit. Every time NEO has NEO Day, the stock pretty much sells off. The difference here, though, is NEO is already selling off into NEO Day. So it's kind of priced in already. So what does that mean? What does that mean if NEO is actually rallying into NEO Day, has that big push higher, and then starts to sell off? Now NEO is actually well below every key moving average, just broke big support, and NEO Day came out. Well, very similar to what we just talked about in Nvax. Not Nvax, I'm sorry, in AMC. AMC broke down, and you need to be aware that that's a big level where short sellers are going to come in and at least try and hold the bid. And if they, not short sellers, short covering will come in there and try and hold the bid, and it ends up spiking in the opposite direction. So we kind of have the opposite in NEO right now, where NEO Day came out. They had a bunch of announcements. The sector itself is not doing fantastic. And we could actually go over and take a look at Tesla. Tesla is breaking down. You can see it's actually in a pretty clear downtrend and heading down again with the rest of the market today. So what does that mean for NEO and NEO Day? It's not bullish at all. Quite frankly, we actually talked about last week that we were actually short selling XPEV, LAC, and LI. And NEO, again, this is a big level here that the stock has traded below. But remember, we keep talking about the different names of the reversal patterns. NEO actually traded into what we call a bullish U-turn on Friday. So if you're looking at the stock right now and saying what should happen and what do I plan to do, NEO, let me actually zoom this in because I really want to drill this home for you because it's kind of an important lesson. This is really what separates chart reading from tape reading, and I just want to make this a little bit bigger so you can see it. If you're looking at this price action right now, it pushed down and a pause, a push down and a pause, a push down, and then an inside day candlestick breakdown, right? On a day that the market really wasn't that strong either, but the stock actually reversed. So if we talk about the price action in NEO and we talk about Thursday's price action, which consolidated, Friday's price action broke down, NEO Day came out over the weekend, the stock should have sold down. So if I'm short selling this stock right now and the stock breaks down and reverses and does not follow through to the downside, it's one of those situations where you need to kind of put it into your playbook. And my friend Mike Bellafiore actually wrote a book called The Playbook. This is one of those things you should put into your playbook as what should happen but doesn't happen. As of right now, I would be hesitant to be short selling NEO because it broke big support, had the perfect candlestick and pattern to break down and have big follow through. It didn't. So I'd be very leery right now if the stock is anywhere above 30 that short sellers aren't going to cover and new buyers aren't going to step in. So again, with the context of today, this could be a momentum trade to the upside as a day trade. I'm not looking for it as a longer term swing trade. So you start to see how you put the pieces together. Neo Day comes out. The stock normally sells off on Neo Day. The stock is actually down for a month into Neo Day. So one piece of the puzzle, two pieces of the puzzle, three pieces of the puzzle, push down, inside candlestick breakdown that reverses. So think about you right now. If you were short Neo and the stock reversed on Friday and actually closed in the upper portion of the range, maybe even close to the high of the day, probably definitely the top third of the trading range. If I was short on that breakdown, and I'm specifically talking about here on Friday, expecting Neo Day to be bad news, which it was okay. But what's more important? What we thought should have happened versus what's actually unfolding. So right now, if you're in my office and we're talking about this, Neo at $30 would be the big level that I'm looking for, because that was the short sale level. That was the breakdown coming out of Thursday, but we reversed all the way back up and traded back into that price action. So I'd be a little careful about being short Neo right now, despite the way the market looks. Futures are down this morning. $30 is the level I'm watching for Neo. If I was short, I'd be out of the position, and maybe even as a day trade, we can catch a couple of momentum trades this morning, which for me would be on the 5-minute chart if I was day trading it, where I'd be looking for those same types of patterns. Well bid, well bid, well bid, indecision candle, and then hit the road and book that cash flow. So $30 in Neo is a big one. Other stocks that I'm going to be paying attention to, Nike and Micron, both have earnings today. The big conversation around Nike is obviously the supply chain. What's super cool about Nike right now is, especially based on the conversation that we've been having today, is you should be able to see very clearly the difference between energy candlesticks, indecision candlesticks, and look at all the indecision around Nike the last few weeks. We actually rallied up, hit new, fresh all-time highs, did not stay there, and now we actually broke out of this to the downside. So where is the edge in Nike? We're getting a lot of questions about, what do you think about Nike after the close today? What are you doing with Nike after the close today? I don't have an opinion. Quite honestly, I don't see an edge. If anything, there's bearish indecision right now. But if I'm going to look to take a trade in Nike after earnings today, again, I'm going to do exactly what we just talked about. I'm going to hold these up for you again, just so you can actually, right there. These are two of the best books that I've read, and these are probably both from early 2000. These are probably from like 99 to 2001. These are really old school day trading books. You definitely you want to get in there and take a look at those. So Nike, I don't have an opinion on right now. I'm waiting for Nike to come out, and then when Nike comes out, I'm going to trade the momentum in Nike. If it happens to be to the downside, if earnings are not what's expected, if they come out with supply chain issues are still there, which is going to reduce the growth numbers that is expected, probably going to trade the momentum to the downside. So why all this talk about momentum, right? Because we're also going to talk about, obviously, just give you a heads up that Micron also has earnings after the close today as well. Same exact story. So why all of this talk about momentum? Well, we actually talked about this last week, but I want to bring it back up again, which is the bigger picture of the market. We had a picture-perfect market here, and we were holding on to trades with a little bit more conviction because we pushed and we paused, we pushed and we paused, we pushed and we paused and we pushed. And then the market went into this 5 weeks of chaos, for lack of a better way of putting, where there's taper tantrums, where there is a whole bunch of conversations around the Fed right now, the conversation around interest rates, the conversations around future valuations, the conversations now about whether I don't know if I could say it, pandemic right now, and now it's not getting better. There's a lot going on right now. This is why you need to understand the difference between, are we driving in wide open road, or are we in stop and go traffic, or are we in rush hour traffic? Right now, we are in rush hour traffic, which means we're kind of dodging in and out of cars, which is why I'm spending so much time right now on momentum type trading. My trading, the trading I've been calling out in the community, has been a lot less order flow driven in bigger picture, looking for longer term swing trades, and more let's find the entry, let's ride the momentum. Let's find the entry, let's shift to the profit maximizer, because I'm reading and walking members of our community through the tape has changed, therefore how we allocate money and the way we're using order flow is going to adapt to what we're seeing on the tape. And I hope I really hope that I'm opening your eyes up to something, that the market conditions change. We don't change the strategy. We're changing how we're implementing the strategy. There's a very big difference, because the bigger picture of what we normally do is looking at order flow. We're looking for the push and the pause and what happens in between the push and the pause, and looking to build a position. Sometimes the push and the pause, we're looking to add. Sometimes the push and the pause, we're looking to exit, right? In this individual scenario, the way the market is right now, we're playing a little bit closer to the vest because the conditions are a little bit tougher. Tougher conditions means that we just adjust how we're reading the order flow, how we're reading the tape, and how we're managing profits. It's a big difference right now. And what's kind of interesting is you can also make a decision to adjust your position sizing, because if you're down on lower time frames, you can actually have tighter stop losses, which ironically, if you have discipline, means you can increase your share size just a little bit, because you're either wrong right away and it's not working out and you get out, or it moves in your favor quickly. You scale out of some of it and then you ride the balance. So it's a lot to cover in a very short time period here on Monday morning. But I wanted to expand your thought process, especially for those of you, and unfortunately, this is a very big deal right now, especially for those of you that are holding losing positions that the market pulled back and you didn't have the discipline to get out. The tape changed in a lot of the stocks you're looking at, and you're sitting on losing positions much bigger than you probably wanted to stomach. What I'm trying to walk you through, at least to open your mindset to, is the fact that you need to have a system, whether it's moving averages, whether it's drawing trend lines like I do every day and show everybody every day, or whether it's simply using individual candlesticks. You need a process to know when your trade has changed, when and where and how does it need to look to tell me that my idea is no longer valid based on my entry. You will save yourself a small fortune by understanding that you need to look at both sides of the trade. You can't only say, how much can I make on this position? You have to say, okay, I really like the idea. That's where I'm getting in. What does this trade need to look like if it's not working out? And then take action and get out. It's a big deal. I can't tell you the amount of people that I'm getting messages from. I'm stuck in this stock. I'm stuck in that stock. You're not stuck. You just chose not to get out. Worst case scenario, get out. If you just can't get out of the entire thing, scale out and have a plan to get back in. If you have 1,000 shares, take 500 off the table, reduce your risk. That's the way professional traders manage. And the other side of that is when stuff is working out, you'll see traders trade around a core position where they get a bunch of shares, spikes up, they take some profits, dances around a little bit, put those shares back on. They're trading around a position up to wherever they believe it's reversing. So I just can't express strongly enough. If you haven't recognized it, if you haven't admitted it, the market, the circumstances have changed. This is where we start to work our way a little bit more into hedging. This is where we start to work our way a little bit more into booking more profits. This is where we really need to drill down more into individual industry groups within the context of the much wider sectors. This is where you got to put on your overalls and do a little bit of extra work. I hope that you join me here every day at 7:30 in the morning to have these types of conversations and have some good questions, because that's why we're doing the 7:30 every day, to help point you in a direction, at least to kind of help you recognize what the current conditions are, and then only you could make those final decisions for yourself. Obviously, I'd love to see you in the boot camp with us, but if you want to stay here on social media, of course, that's fine too. You can only decide how much you want to invest in yourself and how deep you want to go behind the rabbit hole. So thank you so much for joining me here, everybody, today. So obviously, we're going to take a look at, in the context of momentum, we're looking at the healthcare stocks in momentum. We're looking at some of the Chinese electric vehicle stocks and electric vehicle stocks in general, based on looking to see how they're trading around NEO and NEO Day today, see if that's a little bit of a catalyst. Tesla's getting hit pretty hard this morning. And we're going to take a look at some of the semiconductor stocks this week, with Micron reporting earnings this afternoon. Quite a few of them are actually hovering right at that 50-period moving averages, which is the last place that I'll start to look to be a buyer, typically only above the 50 or stronger. All right. Have an awesome day, everybody. Please do me a favor, smash that like button if you got some value here. Hit that subscribe button, because we have some new training coming out this week as well. Have an awesome day, everybody. Remember, 4-day week this week. The market's closed on Friday. I'll see you tomorrow morning. Thank you so much, everybody. I really appreciate it.